Hi, it's Patrick Reed from the Adamus Principle. We've got some great narratives and stories. You know, inflation's not going away. I mean, either you believe it or you believe the Fed. You believe the charts, believe the rates. Certainly, we had an explosive CPI. And, you know, the fallout from that, you really should expect the dollar to be a little bit higher. You know, so that to me means that the market's really believing the Fed right now in that transitory moment. Okay. And, you know, the bottom line is, you know, despite these moves, we just sense the dollar just seems to be offered more than its bids. Now, let's take a look at the first chart to confer this. Euro dollar. It's just grinding up, overlapping in a very much euro-dollar way. But as you can see here, the trend channel is still fully intact and it's going one way, and that's higher. So, you know, any close above 122 today will be a significant scalp for the bulls. Now, the only thing I will say, we had PMIs today, this morning in Europe. Not that bad, actually. We had a bit of a strong French PMIs, a bit of a miss on the German manufacturing, but still in the 60s, no real shame there. And all in all, the cumulative effect was a pretty healthy figure. That said, you know, things can turn on a dime. So that's your euro dollar. Next chart. Aussie dollar, not really feeling the love like euro, but we are really much range bound. The ranges here are 77, the figure, all the way up to 78.26. That's a kind of a double Fibonacci corridor from 38 to 50 to 61.8. This is sticky. This means that price is really comfortable in this area, and it would have to take something quite significant. You know, some more escalations with the tensions in China. There is talk today about Taiwan being on the brink, but that in itself is not so important for Australian dollar, and you know, it could have a tail to that. But at the moment, so far so good. Next chart. Okay, so we got our old friend dollar yen. Really an interesting thing on dollar yen that's happening at the moment is sometimes, you know, in my old days when I was trading futures, dollar yen would really go lower on risk off, despite broad dollar higher. You know, that is in its, you know, that's in its DNA. But recently, dollar yen's been going higher on dollar higher. Okay, that kind of changed a little bit. And now we're pretty much offered. We're now going lower with dollar lower. So it would take a significant risk on scenario for that to go higher. That's just my own personal view. And the final chart. Now, this is really interesting. This is dollar CAD. We are, you know, on the one hand, you've got the Bank of Canada, the first central bank to taper. Then Macklem came out with some comments showing some concerns of a you know, a higher CAD. So that kind of cooled down a lot of those bulls, just cooled it down a little bit. Then you've got this indecision in dollar, although at the moment I would say dollar is broadly back on the bears being offered. But really, if you look at dollar CAD, it's not quite sure what it should be doing. This 120.50 holding so far, but this 120.14 is the low in place. It really needs to break above 121.86 for any of these dollar CAD bulls to start to feel a bit more comfortable. The longer it stays down here, the more risks are to the downside. Okay, so that's it from me. My name is Patrick Reed, and have a wonderful weekend. Patrick Reed, Adamus Principle. Thank you very much.